Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on Aussie Kiwi, Aussie CAD, the S&P 500, Pound Kiwi, and Pound Dollar. Last time we were looking at a long trade on Pound Dollar after the BOE interest rate decision, and look what happened. Before we look at that, don't forget to like, subscribe, and get notified on YouTube, Facebook, and Instagram, and please check the disclaimers on the GCI website. On the 1-hour chart, we see price action at the lower trend line of a run that started 6 days ago. However, be aware that this technical indication is not shared on every time frame. For example, on the 4-hour Pound Dollar chart, we see an overbought stochastic oscillator, but it is clearly not convinced of a downturn, and MACD is looking bullish still. On Pound Kiwi, we are seeing an uptrend from the end of last month, a bullish stochastic oscillator, and resistance above at just below $2.35. Again, check other time frames. Rumors of the U.S. government shutdown ending have rallied the U.S. indices, but we saw a slight pullback this morning. Technicals on the daily charts show bullish price action, with price bouncing off the lower trend line yesterday after this hammer candle on the S&P 500. But don't forget, anything can happen under the current U.S. administration. Speaking of fundamentals, we have holidays in the U.S., Canada, and Europe, so markets may be a bit quiet. Thursday and Friday will be quite important for the U.S. Federal Reserve, as we have lots of CPI, PPI, and retail sales data coming out, and this will affect the U.S. dollar, gold, and silver. We have Australian employment data on Thursday as well, and if we look at the charts, we see that if we get a pullback from the news on Aussie Kiwi, we may have a long opportunity. The opposite may be true on Aussie CAD, as we see a clear downtrend, price action just bouncing off the upper trend line, and a bearish stochastic oscillator. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.